Hey everyone. All right, we got Benton in here. We're just waiting for other co-host or other speaker, Herwig, so we can get started in a few minutes. Ben, how you doing today?
Yeah, doing great. Super stoked to be here. Thanks for having me.
Awesome.
How's everybody
Very,
doing?
very excited to have you. Yeah, Noah, Jackson, Bob, good to see you. We'll give it another couple minutes and then we'll get started. All right, Herwig, inviting you to speak, and we can kind of get going here. Perfect. All right, Herwig, how you doing?
I'm good. I'm good. Can you hear me okay?
Yep,
Hey, man.
doing
How are you?
perfectly. I'm very well. Doing really, really well. Um, yeah, so I'll wait to make an introduction until we have a couple more listeners, but yeah, really excited to have both of you guys on. Yeah, we're gonna get into a lot of different topics today, but just so you guys can get a little prepared, we'll start with the Bitcoin ETF because I think that's such an immediate topic that we can focus on. And then I think what we'd love to do is dive into, various aspects of both DeFi and real world assets and kind of how they intertwine.
Sounds great.
Right on.
Perfect. All right. So yeah, we might as well get started. So thanks everyone for joining our space. Really great to do another one of these, first one of the year. This is the real world assets space that's hosted by Infineo. I'm your host, Alec Beckman, joined by co-hosts Pollock and Jackson Blau from the Infineo team. Two amazing guests today. We have Benton, who is formerly at Cointelegraph and Waxman, and recently started his own marketing agency within the blockchain space called Four Labs Digital. Also very DeFi native, so we'll be leading on you, Benton, for some DeFi conversation today, and then joined as well by Herwig Konings, who's the CEO of Security Token Group, who has a bunch of different companies underneath it, including Security Token Advisors, Security Token Market, as well as Security Token Capital. So great guests today, and yeah, I think Benson, if you wanna kick us off with an introduction, just on yourself, I think we'd love to hear.
Yeah, right on. No, thanks again for having me. Super excited to be talking today and diving into real world assets and DeFi, and how those kind of two worlds that I think are going to collide here this year and next year. A little bit of background about myself. I'm the former chief strategy officer over at Telegraph, and then bounced to Waxman, which is a PR and digital marketing firm, and helped them build up their digital marketing division there. And then recently just I co-founded a digital marketing agency where we primarily work with a lot of crypto and blockchain projects, but also we're kind of venturing into the traditional world as well. So I've been in crypto personally since about late 2018, and have really gravitated towards DeFi. So my beginnings were kind of back in the EM finance, sushi swap days, and I have been down that rabbit hole ever since. But thanks for having me.
Perfect. And Herwig, you want to give an introduction about yourself as well?
Yeah, with pleasure. My background, I think, is worth noting. Before I even got into blockchain, I founded a company over a decade ago now called Invest Ready. We provide accreditation software for online investment portals and looking to raise cap, make sure that their investors qualify with certain regulations. And as a result of that, it really became a bit of a compliance nut. And in 2017, found myself advising a company trying to do a Series B. They wanted to, and I helped them steer clear of any securities issues and had them, register an exempt offering with the SEC and help them basically structure and launch their token off the beginning of our advisory business, where we help people understand and find the right partners to work with in order to bring a world asset or a security token to market. And then we are a venture back. Have launched a media arm called Security Token Market. We're a little bit like Coin Market Cap or Yahoo Finance. So what the price, the different security tokens are on the different marketplaces, you can find it all in one place at stm.co or stmmarket.com. So that's Security Token Market. Forward to being here. Thanks for inviting me.
Awesome. And joined as always by our own Dr. Robert Murphy, who's going to be a very frequent guest for us, and we'll give some really good macro insights, which is a great segue. And actually, Benton, I'll go back to you first. But where I'd love to start the conversation is around the Bitcoin ETF. Obviously, this has been the main thing in the news in the past few weeks. It does seem like we're about to get the green light. I was just talking with Noah before this about how it seems like tomorrow it could get approved. Best case scenario, trading by Thursday. But wanted to go around the room. We'll start with Benton, then we'll go to Herwig, then we'll go to Dr. Murphy, and just get an understanding for what do you think about this? What are the implications? What does this do for blockchain and crypto adoption? Benton, if you want to kick us off here.
Yeah, so Bitcoin ETF is kind of an interesting thing. I think ultimately it's bullish for Bitcoin in space in general. You're gonna have billions, if not trillions, of inflows from more kind of traditional companies. Some of the biggest names, are gonna get involved with this. And now, your grandparents and parents that were like, "Hey, what was Bitcoin?" can now pretty easily kind of get involved with this. I think like we're gonna see, a huge kind of this crossing of the chasm, if you will, really in the next kind of year with this. But ultimately, my big concern is creating kind of like this paper form of Bitcoin. Will there be more than 21 million Bitcoin on paper now that there's kind of an ETF? So I think there is a little bit of concern and reservation I have over the long term. And, it's like I'm a Bitcoin purist. And so it's like I want to hold the real asset. But for those who maybe aren't as savvy or don't want to go down that rabbit hole, this is a great avenue for them to get exposure to it. So, ultimately bullish on it. I think it's going to be great for the space.
Yeah, Herwig, if you want to add some thoughts there.
I think that was well summarized. I think it's going to be most of these bull cycles are led by Bitcoin. And so this is obviously a natural signal. I think this is great timing as well with the housing this year. So the two forces coming together, I think are going to make for a very interesting bull run for Bitcoin, which I think is going to lead to a lot of eventual spillover into the rest of the market and all the other sort of, NFTs and RWAs and other use cases. And I think it's a big victory for the whole crypto market in the United States specifically, where, regulation and the environment has always been pretty bad for crypto, and so this is a big signal to the world that the U.S. is treating Bitcoin seriously, indeed a digital asset that people can just via Wall Street. And I think that's awesome. It's going to be a great thing for everybody, as people like to say, a rising tide lifts all ships.
Perfect. And then, I'm going to have some follow-up questions, but Dr. Murphy, did you want to add anything about what a Bitcoin ETF means?
Yeah, sure. And thank you to our guests for giving us your time and insights here. Right. So I'm just going to piggyback on what our guests have said already, that, the kind of rationale of, why have an ETF in the first place? What function does that serve? And there's lots of investors who, for various reasons, want exposure to a certain type of asset that it's difficult for them to implement. So, putting aside Bitcoin, there's things like somebody might have a view about what crude oil is going to do, but they can't go out and they're not going to go buy physical barrels of oil or short them, or they're not even, savvy enough to go into futures markets and things like, but if there's a crude oil, ETF or something, they can just do that even within the context like of an IRA or a 401k that might, have very specific rules about what kinds of things you can invest in or not. This is a way people can get extra certain assets. So the same is true of Bitcoin. So in general, by giving access to more people who might want to invest in it, who otherwise would not pull the trigger because they're either, they're just afraid, they don't understand how it works, or they've seen some scandals and they're gun shy, whereas here they trust, household name type of ETF offering. So that should bolster the demand. I would say that I just want to caution people, a lot of that's to the extent that the market already saw this coming, you're already going to have seen that priced into the Bitcoin price, but we don't know exactly if it's going to work or not, the regulatory issues and such. So but it's not as if, the price is just all of a sudden going to spike opens, but, markets would have seen it coming. Last thing I'll say is, even though I think in general, the existence of this bolsters demand, it actually can paradoxically increase volatility. I remember when futures contracts were first being proposed and then gradually introduced, that, on one hand, and I got my face because I was explaining that, oh yeah, in principle, the introduction of futures contracts should allow for, smoother price appreciation over time, not as much volatility, as if people have specific views about what's going to happen 30 months out, that can sort of show up in the futures contracts and get pushed back through arbitrage. But of course, there was massive volatility because now people, if they wanted to short Bitcoin, could just do it for the futures contracts, and it was easier than doing it, directly. So the same thing is here, that yes, it allows for people who want to hold it to get in now more easily. But on the other hand, if people for whatever reason wanted effectively short Bitcoin, this gives them more leverage too. So I think, higher demand overall, but it may increase volatility, at least in the short run.
Yeah, I've spent a lot of time thinking about like kind of the dangers of the ETF. And I didn't really even consider that, like making it easier to short and sell in the long run. I was more worried about what Benton touched on earlier about like how they're, the chance it ends up being more than 21 million Bitcoin. Benton, I'd love if you kind of went deeper into that and kind of the dark side of the ETF, if you will.
Yeah, I mean, so like I think one of the biggest things too is like it's like ETF issuers, from what I understand, can kind of issue more than what they have technically, I think, on their books. I don't know the specific like mechanisms of that. Not like a securities expert, but from what I understand, it's like there could theoretically be more Bitcoin issued out than what they hold. And so like that to me is a concern in the long run, where it's like, how many ever years from now when there are 21 million Bitcoin, is like, is there actually more in circulation on paper via an ETF? So for me, it's like that could dilute, the actual asset in the markets. And so that would be kind of a concern for me. But something that I don't think is like catastrophic right now. I think we won't probably see anything like that, for the next couple of years.
I saw some things like the, I guess, exchangeable one-to-one type of things, but I feel like I kind of stopped hearing that like a month ago. Did anyone else hear anything about that being pushed into the rules of the SEC? If the SEC wants them to be kind of, redeemable, I guess you could say. I just haven't really heard much about it.
I haven't much about it, but one of the core tenets would be the redeemability. Right now, I mean, we do see the existence of Grayscale Bitcoin Trust, and I mean, that's always traded at a discount. And I mean, when there was expectation of that being converted to a spot trust, that we saw that discount start to shrink. But I'm not too sure exactly. I would hope that we'd see some sort of redemption mechanism. Does anyone have any sort of insight on it?
I know that just before the end of the year, BlackRock, which, whatever they do, it seems to be that everybody else had to update to allow for cash redemptions. Like that was something the SEC was pushing for. I don't know how much that affects the Bitcoin redemptions. This is not exactly my expertise, this area.
Yeah. Let me just jump in too for a second. And I know everyone in this discussion is aware of this, but just for the listeners to make sure, so strictly speaking, there's two separate things. One would be if there is a redemption mechanism, that's legally binding. But a second thing would be like proving 100% reserves, right? So right now, commercial banks, if you give them $1,000 in US dollar bills, they owe you that money. And in principle, they're legally on the hook that when you show up, they should owe it to you. But of course, that's not the same thing as them keeping that dollar for dollar in the vault. And so likewise here, even if there is a redemption mechanism in place, that's not literally the same thing as saying they got 100% reserves and this, that it's not going to artificially inflate the effective number of Bitcoins that are floating around. That people in their heads think they're carrying more than 21 million total. That could still happen even if the ETFs are contractually obligated to redeem upon demand.
That makes sense. Another thing I want to touch on, I guess, to wrap up the ETF part of this space is, where does this kind of take future crypto ETFs? Like personally, I don't want to see an Ether-Sol ETF, but I'd love to hear, everyone else's thoughts on, where this goes for ETFs and the rest of crypto.
Yeah, I mean, I believe it was Bob that had mentioned this, was like, it's just giving people more exposure and ways to hold those assets. So it's like the same way that people don't want to hold the native asset, or whether it's a pension fund that wants exposure or a more traditional company, it's like, it's the same thing. And I think, the second best form of money really is Ethereum. The one thing that would be concerning to me is like when you start to venture down the risk curve even further, Solana in its like form is not really a form of money. I mean, you've heard Annalie talk about, how Solana is going to kind of function in the economics of the Solana ecosystem. It's not functioning as money. It's just kind of like this fee generation, and it pays the validators. And like, that's just kind of like what's keeping the Solana ecosystem going. It's not necessarily like a true form of money like an Ethereum or a Bitcoin. So, ultimately, I think it will be a good thing for the price action of those assets. But I am concerned, like, beyond those kind of like larger assets, like, is it really a good thing?
And Ben, you actually started to mention something that I've been really interested in and can't seem to find a great answer myself on. And I'm curious what the group thinks. I've been really interested in what this Bitcoin ETF approval could actually do for the price action of Bitcoin and what we might see in the various scenarios of approval, semi-approval, or denial. And in my opinion, I mean, I was reading a Cointelegraph article that was saying, or basically making the point that this ETF is already priced in, and we have a lot of Bitcoin holders right now that have a lot of unrealized profit, so that they were actually making the point that this could actually hurt Bitcoin price, and we can see the price fall after an approval. I've obviously seen all the bulls calling for Bitcoin to 6 figures, 7 figures, and I just wanted to see if you guys had any opinions on what the ETF could mean in terms of the price impact on Bitcoin.
Well, sure. So I'll jump on just, again, the general framework here is with financial markets and stuff, you got to be careful that stuff is always relative to what the expectations were, right? So, I mean, just to give a goofy example, you wouldn't say, oh, you should go buy fireworks stocks in late June because come July 4th or July 3rd, sales of fireworks are going to go through the roof. Like, the market already knows that. That's already priced in. Now, what would happen is if there's, another pandemic and they say you're not allowed to go outside on July 3rd and 4th, and then, maybe that would hurt sales and things. So, unexpected. So here, the regulatory action, it's based on if the regulators do something that the market wasn't expecting, then that could cause things to go, the other way.
So I guess on that note, do you guys feel that overall market sentiment is that the SEC will approve it right now? I do feel like the market seems pretty confident in this approval and that it would be unexpected if it were to be halted for any reason or denied, which could result in negative price action.
I just don't see a reason why they would not approve it. It's like they've gone this far. They've had all of the companies like invest their time into this. It's like for them to like rug pull at the last second just doesn't seem logical. But I mean, we have seen crazier things from Gary Gensler, hashtag fire Gary. But I would say, like, I think when the gold ETF was released, there was a huge dip in the market. So I think all of your kind of like native, crypto folks that are holding an asset, are waiting for this point for more retail to kind of come in and sell into that. So it wouldn't be surprising to me if, price action drops. But I mean, ultimately, I think we recover before the end of the year. So that's my kind of take on what that could actually do to price action.
Awesome. So, I think this has been a great discussion on the Bitcoin ETF. Really happy we were able to cover it. What I'd like to transition to, I'll turn this over to Herwig in a second, but, kind of along with the Bitcoin ETF, other things that Infineo is focused on, and one of the things that STM and STG and SDA has been extremely focused on for the past few years has been the, adoption of real-world assets that are on-chain. So, Herwig, if you could quickly just give an overview of some of the stuff that that STG is doing as a whole. And then, I think we'd love to get into a conversation around real world assets, what's available today and what that looks like, because, people know a lot about crypto. They know about, accessibility with potential Bitcoin ETF and making it easier to get other people. But I think as far as institutions and, different investors who are more comfortable with more traditional asset types are involved, I think they're going to want to hear about the real world asset space. So Herwig, just go ahead and start talking about that, and we'll form a discussion from there.
Yeah, with pleasure. I think RWAs is going to be the one of the hot terms of the year. So this is music to my ears because I've been in this space for over 6 years. As I mentioned earlier in my introduction onto this, that we have an arm that's helped over I think it brings 50 different clients of all kinds understand how blockchain technology can help them in some kind of capital markets benefits, right? And those are usually separated into two forms, the primary and the secondary market. The idea being that entrepreneurs, venture capital funds, real estate funds, traditional kind of Wall Street type instruments, and pretty much anything that we consider a instrument of value can be put on chain to take advantage of pretty much smart contracts and the efficiencies that blockchain brings to the table, from transparency and a lot of other benefits. So we help on the advisory side as a consulting arm. We've helped different projects figure out who the right, partners that they need to work with from the different blockchain solutions that are out there. There's also a lot of commercial tokenization providers out there. And then there is the actual marketplace component angle of, are they going to work with broker dealers? And because they're security tokens or, regulated instruments that are on chain, they have to be following certain rules and parameters. And so we make sure that's all the case, including where they list and where they and all that. So we've seen a lot of different uses. We work with anything from, mom and pop deals to $500 billion asset manager as clients. And then we also have a media arm where we track the different marketplaces themselves. What are the different securities or tokenized investment products that they offer? And then obviously, what's the price action around that? What's the open, what's the close, the high, the low, the volume. Find all of that in one place at our website, as well as our weekly Nudo Security Token show. We cover every week what's going on in the market, the new latest offerings, changes in the marketplaces, etc. So I invite you all to definitely go check that out on YouTube or anywhere else if you're interested in this space. But being in this space, it's really exciting. This new form of security tokens, if you will, through RWAs become very important because people are starting to recognize that, especially when it is outside of Bitcoin, but even Bitcoin has now the Lightning Network, which people are issuing security tokens on, including the Volcano bonds that are being issued. And then also, of course, this is a bit of a merge of worlds because at the time last year in 2023, it's worth noting that on top of the RWA concept really being formalized in the form of treasuries products and a lot of credit protocols, Maple Finance, Centrifuge, even MakerDAO, and a few others come to mind, we also saw institutions in Wall Street say, hey, this is also the future. Anywhere from BlackRock as well, Larry Fink saying the future of markets is tokenized markets. We saw JP Morgan, Goldman Sachs, Apollo, Wisdom Tree, Franklin Templeton, large investment banks and trillion-dollar asset managers all start to do proof of concepts and publish results and even launch commercial services in this space. So 2024 is going to be an exciting year because capital markets and crypto markets are kind of recognizing that, there's hundreds of trillions of dollars of assets and securities to tokenize, and things are going to get very interesting. So excited to hear what everybody thinks about the topic.
Yeah, Herwig, and thank you for that. And I was recently just on your Tokenize This conference, your virtual conference, but I got to listen to the JP Morgan Onyx conversation. I forget the woman who presented on it, but she did a really good job explaining what was going on and why they're interested, really. And I was wondering if you could talk a little bit, Wig, about kind of, what groups like JP Morgan are doing, maybe even get into their most recent announcement, around being able to create interoperability between multiple chains and, their wealth management clients, and kind of why this is important for the space moving forward.
With pleasure. What you're asking me to do is break down Project Guardian for anyone who wants to look this up. Project Guardian is actually run through the Monetary Authority of Singapore, so a much more friendly jurisdiction with regulatory support to be able to explore all of this stuff. And Project Guardian is a number of trials, but the biggest one that made the headlines last year, just towards the end of the last quarter, was JP Morgan and Apollo announced basically an entire rebalancing portfolio concept. So this is pretty cool. They worked with Layer Zero, they worked with Avalanche, a few others, as well as Oasis Pro as a secondary market, as well as JPM's private bank, Apollo Funds, and Wisdom Tree. So you've got three different managers in this equation. They use Providence blockchain, Avalanche blockchain, and the Onyx blockchain, which is JP Morgan's blockchain solution, is kind of the center master record of it all. And through the system developed, they were able to rebalance a portfolio with a few clicks of JPM funds, Apollo funds, Wisdom Tree funds across a number of different blockchains. And so what they did was actually really exciting because they actually quantified, what these results. They quoted it down to, this took about 3,000, operational steps, the back office, if you will, what happens in the traditional legacy asset management. And it was reduced down to a few steps, to a few clicks, thanks to everything being on chain, thanks to atomic swaps, thanks to all the benefit of the blockchain. This is a whole new world of asset that's going to be introduced as a result of this. And so asset managers are also paying attention. On a similar note, we saw Franklin Templeton. They launched a money market fund, an on-chain treasuries product where you now get exposure, and they are on 6 different chains, supporting 6 different chains with a regulated 1940 Act fund. Everyone's focused on Bitcoin ETFs, but in our world of tokenization and RWAs, it's really exciting to see the SEC approve publicly registered funds on chain. Wisdom Tree's done the same thing. Wisdom Tree last year, they launched an app after over 4 years of investing into building this out. They have an app that's backed by their own broker-dealer and their own platform to enable instant settlement and redemption in 9, maybe more now, different products that they all registered with the SEC. They're all on chain. Eventually, they want to enable collateralization. I believe they even want to enable a credit card that you can attach to that account so you can essentially pay for things out of your investment account. All thanks to everything being on chain, they can do these things. So, institutions are definitely starting to move on this technology in a big way.
Benton, just to kind of transition to more a DeFi thing, I was curious, like what you saw and what you're seeing in the DeFi space that is being made possible by real world assets and security tokens. I guess where your head is at in terms of like the average DeFi user kind of being comfortable with security tokens as it plays a role into the DeFi ecosystem as a whole.
Yeah, I mean, it's one word, and it's always been one word. It's yield. Whether you're an institution, accessing DeFi through real world assets, you want yield. So the biggest players in the game are going to go wherever they can get and maximize that yield. If you're a retail user, that's where you're going to go as well. It doesn't matter what chain. It's about the yield. I think for me, that's what's most exciting about this is like even the fugazi of DeFi, over the last kind of like year or two. Olympus DAO comes to mind for those that are familiar with like that project and the whole Cambrian explosion. And a lot of the yields that have been happening is just because it's Ponzi-nomics. But now there's kind of this real base foundation to DeFi that I think it's going to help flourish and help expand that. There's going to be more access across that. And as regulations, especially stateside, become more clear around these kind of things, I think it's just going to expand the use of DeFi instruments and integrating those into real world assets to be able to access and tap into that real yield.
Yeah, that's an awesome answer. And Herwig, for you, I was curious, I guess almost going backwards, but what do you think of these real world asset having tokens? Like, a lot of the token values have skyrocketed in the past couple months. But to me, like my first instinct is kind of like, well, they're taking a real asset and kind of like, I guess, fundraising with a token. It almost seems like they're making the real thing a little scammy. I'm curious your take on it. And Ben, I'd love for you to chime in on that as well afterwards.
Yeah, it's a great question. I kind of look at it from a historical timeline that NFTs were a really great introduction to the concept of tokenization, right? Tokenizing a digital file, an image to a token and attaching some kind of a right. It really was sort of a baby version of security tokens and RWAs in a similar fashion. For sure, I think it's great. Just to Benton's point, I think yields coming from stable sources tied to real world assets, right, to real opportunities that have some kind of basis is going to allow for an even more exciting foundation in DeFi and a lot of other use cases. However, I do get worried because for sure, as the concept gets popularized, we get once again in this battle of regulation. And with RWAs, it's a little bit broader, and you can start to maybe even tie in like collectibles and other Beanie Babies and other kind of real world assets that obviously don't have any regulation to it. But the moment you start potentially implementing DAO structures and different rights and tokenizing actual assets or securities like real estate projects and others, you basically have to comply with regulation. And undoubtedly, as the crypto market has proven time and time again, there will be people who will be beyond those rules and issue projects that the SEC is going to have to shut down. And unfortunately, that's going to bring a bad name to RWAs. And that's sort of what we've seen time and time again. So I sincerely hope that the industry has kind of matured and gotten to the point where as we start to bridge real world assets especially the ones that are regulated, into DeFi and other on-chain applications, that we make sure that, of course, all the regulations followed. Or what we're going to see, which we have been seeing, is a lot of innovation go outside of the United States, such as Coinbase launching Project Diamond, which is their sort of tokenization and RWA play out in the Middle East, targeting institutions, most interestingly enough. So that's kind of what I see when it comes to the RWAs. But overall, it's just exciting to see, again, like we saw last year, the treasury specs went from like 30 million to 700 million, or close to $1 billion in overall on-chain interest, total value locked up into them. So those are the types of things that I love to see for the space.
Yeah, and just to add on to that a little bit, I think one of the reasons that real-world assets and securities compliant tokens specifically came about was back in 2017. That was the first big like crypto bull run, in the sense of it was getting national headlines. People were really talking about it for the first time, even though there had been bull runs obviously before that. But what people started doing was they started selling tokens with the promise that it would have financial benefit and that they were investing in something that could, make them a ton of money. And the problem with that is that's very illegal. Securities and Exchange Commission, the SEC, has very strict rules against taking in money without taking the proper steps first. And the reason that there are laws in place like this are for investor protection. So investors don't, get, for lack of a better term, screwed like they did when, all these companies were selling tokens with promises that they couldn't keep, without filing exemptions with the SEC, without a private placement memorandum addressing the different risks that were involved. So from that, security tokens, or securities compliant tokens, were born as an attempt to show compliance with existing laws today. And so I think, taking it back to your original question, Noah, which was around what do you think about real world assets that are launching tokens, or like real world asset projects that are launching tokens. I think there's an important distinction of having a securities compliant token, which in almost every case that we've seen represents equity in some form in a compliant way. Adding a blockchain layer is just a useful element for ownership, provable ownership, transferability, all these different aspects. And then, taking a token on top of that, like whether it's a token, or some other form of token that isn't securities compliant, there's obviously more risks involved with that. So just kind of wanted to revisit that now a little bit and add on to what Herwig said.
Yeah, the ICO era was crazy. I remember just like, I got into it around like 2016 as well. And I remember just like talking to friends about it, like the whole like tokenize the world was a thing. There was, going to be tokens for power lines, for road tolls, for everything. And yeah, I mean, a lot of people definitely got screwed on ridiculous promises. Ben, I was curious your take on it. Like, have you invested any real asset tokens, that are, something like Maple or Centrifuge or Goldfish, for instance? And I was wondering your take on the whole thing.
Yeah, I haven't personally invested in any kind of like real world asset projects yet. I'm still on the sidelines. I think we're probably, I want to say at least another year or two away from really kind of like seeing that space take off. For me, it's like, I think the tokenization really is just like the implementation of technology. It's a way to decentralize way of ownership. And so like it removes a lot of like the middlemen from like lawyers, brokers, banks, that kind of stuff. And it allows maybe you're like smaller fish that maybe have a net worth of $500,000 instead of hundreds of millions to be able to access assets. Like if I wanted to go invest in a building, it's like that I now have mechanisms, and I think that's where it's like that becomes the promise of tokenization. Is it makes things more efficient, it creates transparency, and also decentralizes kind of the traditional methods of getting involved with those types of assets. So for me, that's where I'm kind of like sitting on the sidelines still, and I want to see where does it evolve, where do some of the government bodies come down on things, and that will kind of provide clarity for me as where I want to start kind of like placing bets.
That makes sense. It's Herwig, just something I was, I'm pretty new to security tokens in general, but one thing I noticed and I talked to Alec and Jackson about is kind of liquidity issue in security tokens markets. And I was wondering if you have seen more volume recently, and if you expect kind of more volume to come as real world assets become a thing. Will that also, you think, bolster the security tokens markets?
That's definitely been one of the problems with the whole secured token market is due to the regulation. It's prevented a lot of just adoption, specifically on the marketplace side. I can name a number of different, what we would call equivalents to Coinbase and Binance and Kraken. They have to be broker dealers, which means they have to be licensed with FINRA and follow a lot of regulation. And as a result, they are either slow to even get to market. So they've been basically doing press releases for the last 2 years talking about how they are launching without having launched. And then on the other end, you have a slow listing process because, again, everything is more like almost look at it like a mini IPO. There's still a lot of compliance requirements that have to be met. The digital environment, once it's live and everything's cooking, is amazing. But in order to get all that done, hence our consulting arm, there's a lot of legwork that need to happen. So as a result, there are not a lot of great products on the market. A lot of people like to look towards the same Regis, which is Aspen, which is tokenized and trading on T0. And so you can get a piece of a hotel. To Ben's point about the fact that we're getting lower access to commercial real estate and many other investment opportunities is a game changer for most people who never had access to these types of assets. On the other hand, you have companies like Figure that have issued HELOCs, home equity lines of credit, privately as a non-bank. So they're a lender that is not a bank, literally done billions. They do hundreds of millions every quarter, I believe. In HELOCs to people, they send out advertisements to random homes and say, hey, do you want a loan against... and a lot of people don't even realize that the whole process is happening on chain. They just do as they do and they get their loan. And then on the background, Figure to date last year, I believe they did over 3 different securitizations of a couple $100 million on HELOCs that were all on chain that JP Morgan and Goldman Sachs and Jefferies all sold to their investors. And so that's on chain activity, but he really talks about because, retail doesn't have access to it. But there are huge savings in the life cycle there because it's on chain, and they're clearly moving a lot of weight on that platform, and they're expanding. They've now worked with several other private equity firms and working with a lot of other providers to expand the assets that they're tokenizing. I actually think, in fact, Infineo, they support Providence, and so Providence is a blockchain that they created over there. There's a lot of different use cases going on in the RWA space. From a retail side, again, Ben summed it up nicely. It's all about yield. So what's going to happen this year is going to depend a lot regarding treasuries and rates, as well as what other products start to come to market. For example, one of our clients on the advisory side is a large multi-billion-dollar mortgage servicing rights company. And so they work with a lot of different mortgage lenders and they service those loans and there's cash flows associated with that. And they want to bring that to market. So now you have, new asset classes and new investment products and different grade sponsors behind them that you can potentially get access to. At the same time, we're going to see a lot of the more traditional sort of DeFi approach, where we're also getting very unique use cases that we can't even predict on this call, I bet, that are going to end up being major themes of the year. But that's what's so exciting.
Yeah, no, totally. And I just want to hop in here. The original question from Noah was around liquidity. I appreciate Herwig you getting into some of the other use cases. And one of the things that is a misconception in the space is that liquidity does not necessarily mean trading. And I get why it's easy to think that, like the idea that I'm going to take a private asset, like, real estate, for example, where 99% of all real estate deals are private, non-trading assets with, private investors who essentially the only liquidity they have is eventually when somebody who is, the GP, the general partner who wants to actually sell that asset, wants to just, sell it, which typically takes place after like 5 to 15 years in a typical real estate deal. So with trading, there's a couple problems. One is the marketplaces that are available today are alternative trading systems, which are essentially just regulated entities by the SEC and FINRA that allow trading of securities, specifically private securities. They are being built up today to the point where they don't have a ton of investors. So there's a liquidity issue on trading from just the demand side. And, that's going to take time to build up investors and get them interested and comfortable with investing in securities, private securities specifically, on blockchain. The other problem that I see with that is because the private securities that these ATSs are focused on, private securities don't have disclosure requirements like public companies. So public companies, you can literally find out everything about a public company through, the Edgar filings on online, just on the SEC website. With private assets, the only disclosures that are made are the ones that the general partner, the person managing the investment, decides they want to. So because trading has these, factors that don't really allow it today to be a great mechanism of liquidity, I think one of the things that has sprung out of the security token and real world assets last year has been the focus and, transition of focus to lending and borrowing, which is really, one of the probably, I don't want to speak out of turn here, and Ben, maybe you can add onto this, but I feel like DeFi has been one of the most powerful and most used concepts and applications of blockchain to date. So I think being able to use infrastructure that's been built on the DeFi side, making loans instantaneous, making them, strictly based on collateral, making the process of getting a loan much easier. I think that that's the true version of liquidity that is going to have the impact on tokenized assets, specifically in the private world.
Yeah, I think one other thing too, it's like, and you alluded to this, was like, it's like the velocity too of that liquidity. Like things just become so much more seamless. I was kind of like talking about that earlier, where it's like you're removing a lot of intermediaries. It just allows that capital to flow much faster than it normally would. And especially like in the DeFi space, has there already been many institutions getting involved in DeFi? Yes. I think what we're going to kind of start seeing is more kind of KYC'd liquidity, over collateralization, those kind of stuff that we've kind of seen burgeoning over the last kind of like year or two. And so with DeFi being one of the core pillars of the blockchain industry and its use case outside of kind of payment rails, I think those are kind of like the two ultimate use cases right now for where you're seeing the technology being implemented.
Yeah, if I could just jump in real fast too, get just a real mundane observation too, but on all this stuff too, that just to remind people how much in the current infrastructure is just so hobbled. I mean, little thing, like I had to send some funds to an overseas bank, and just, the wiring process and how long that took to settle and things. And even just domestically, I'm in the US. If I write a check from my business account to my checking account, and if it's over a certain amount that's not even that big in the grand scheme, they'll sit on it for like 10 business days before they approve the transfer when I'm lit. So anyway, it's just, I think that's part of all this, that as this picks up, and yes, in the beginning, there's going to be hesitancy, and institutional funds that aren't familiar with blockchain and whatnot, they're going to be nervous. But once they see proof of concept and the underlying technology works, the advantages of this are just going to be so overwhelming that in a short period of time, people are going to look back on, oh yeah, can you remember when we used to have to, do traditional methods of moving wealth around? Just be stunning.
Yeah, that's really good insight, Dr. Murphy. And yeah, the velocity of money is only going to increase as we adopt more and more on-chain technologies. And so really appreciate all your guys' insights there. One last question before we start to wrap things up here. It is the start of the new year, and everyone always likes to make predictions, not necessarily predictions, but just anything forward-looking that you're excited for in 2024 in relation to the big crypto industries. And I would just love to hear what you guys are looking forward to in 2024. I'd like to kick it off, Ben, and that'd be great.
Yeah, I think we've kind of seen this trend, but I think it'll continue to play out across multiple chains. So I guess quasi-prediction, quasi-trend, but liquid staking and restaking. So again, it's like if you're chasing yields, it's like you're going to be staking your asset, and then you can then take that asset and restake it. And so you've seen that across Ethereum. You've now seen that transition over to Solana through Jito, which was kind of like a DeFi summer moment on Solana. I think you're going to start seeing that across many different chains, and that's going to become an emerging trend to find real yield inside of the blockchain and crypto ecosystem. So that's my take for 2024.
Great. And with that, Herwig, anything you're looking for specifically in the new year?
Yeah, well, the Bitcoin halving always, the story tends to be followed by an awesome cycle. And as I mentioned throughout kind of the conversation, that there's really a aligning of the stars this year with a lot of both institutional folks, which also causes pressure on the regulatory environment to get familiar and friendly for this technology. But then also the RWA movement on the crypto side is also going to bring a lot of attention to this market. There's a lot happening all around the world. So what's been 3, 4, 5 years in the making, I think is actually finally we're going to start to see some of the fruits of all that labor, especially with more and more marketplaces going live and more and more products hitting the market. So just excited for this whole year and wishing everybody a lot of success.
Amazing. So with that, would love to give both of you, Herwig and Benton, the opportunity to plug the company and some new initiatives. Herwig, we were talking right before this, and you were telling me about a free research portal that you're launching tomorrow called STP. Would you mind just giving the audience a little information about what that is, why they should care, and can find it?
Yeah, this is unannounced. Well, it won't go live till tomorrow, but Security Token Prime, STP, as you said, will be going live tomorrow. It'll be a free research portal. We actually have been incubating this for some time last year, since April, with over 200 different professionals from different law groups, from different investment banks, from different brokerage platforms, tokenization blockchain protocols, and investors and everyone and issuers in the space. So we've been fine-tuning what is an exclusive weekly newsletter, as well as chat rooms and the resource library and different webinars with different people in the space. So if you like RWAs, you like tokenization, this is the free resource for you. That'll be live tomorrow at securitytokenprime.com, but you won't find anything until then, as it is completely under wraps right now. And we do have a physical event this time around, Tokenize This, in May, where we'll be bringing a lot of the industry together. If you're with the North America Bitcoin Conference, it's the same exact venue and setup, except the focus is all about tokenization, RWAs, and everything else happening in capital markets. So hope to see you all there. And check out the Security Token Prime platform tomorrow.
And I'm sure that all of you in the audience could guess that by the palm tree in his avatar, he's talking about the beautiful city of Miami. And Benton,
You got it.
yes, Benton, could you tell the audience about 4 Lab, you guys are doing, where they can find you, any exciting things that are coming?
Yeah, definitely. So 4 Labs Digital, we're a digital marketing agency. We do everything soup to nuts, from content creation, campaigns, ad campaigns, websites, you kind of name it, anything in the digital marketing realm. We'll help companies build out, reframe their messaging, their digital narratives. And you can find us at 4labsdigital.com. A couple of my co-founders and I have brought our team over from a few previous companies. So we have a team of about 20 folks internationally, anywhere from Europe, Africa, South America, US is where a lot of our team is based. And so we're happy to connect with folks and talk through any initiatives you may need. But feel free to drop us a line at 4Labs Digital, or you can DM me here on Twitter as well. Thanks for having me on today, guys.
Awesome. And then Dr. Robert Murphy, can you talk a little bit about the weekly podcast that you're putting out?
Sure thing. So thanks everyone for tuning in. And if you go to infineo.ai, you can see the link at the top right for the podcast, which is called InFi, the Future of Finance, where every week I talk to guests who have expertise in these various fields that we've been touching on today. And just, big picture, again, what we're doing here at Infineo is, among other things, taking life insurance and tokenizing it, putting it on the blockchain, making it more accessible as an asset class to investors around the world. So we just think we're going to make a lot of innovations ourselves in 2024. Looking forward to it.
Amazing. Thank you so much. Thanks to our amazing guests. This was easily one of the best conversations we've had. Thank you, Herwig. Thank you, Benton. Thanks, Dr. Murphy. Thank you to my co-hosts, Noah Pollock and Jackson Blau. My name is Alec Beckman. I'm the Director of Business Development over at Infineo. If you want to reach out, learn more about Infineo, feel free to give me, shoot me an email, alec.beckman@infineo.ai. Feel free to go to our website, infineo.ai. Feel free to send a direct message to our accounts or one of our hosts, and we will be absolutely sure to get back to you. Thank you. We do this every single Tuesday. Not every Tuesday is an RWA discussion or a blockchain discussion. We alternate weekly by blockchain and real world assets, and then next week we'll be doing one on whole life. So we do those every other week. But yeah, thanks for joining us. We really hope to see you at future spaces, and have a great day and Happy New Year to everyone.
Happy New Year. Thanks for having me.